Thank you very much, Kat, and I'm very pleased to be here. Feel free to call me Professor. I don't exactly have that qualification, but I quite like how it sounds, so yeah, feel free to use that title if you'd like. Okay, so I'm really happy to be here today. I've presented virtually at this conference the past 2 years, but there's no way that can replace being here in person. So it's an absolute pleasure to be here, and I hope you enjoy what I've got to share today. Before I get started, I just want to very briefly share a little bit of information about who we are. So Tourism Economics is part of the global economic consulting firm, Oxford Economics. Sometimes I use the two interchangeably because ultimately we're part of the same company, but at Tourism Economics we focus on the travel and tourism industry, informed by insights from our parent company, Oxford Economics. So if you want more information about what we do, please scan that QR code just to add one more QR code to the list that we've got today, or come and speak to us later. We're more than happy to share more information. Okay, so today I'm going to start by sharing some insights and forecasts on the outlook for travel and tourism globally. Then I'll move on to focusing on APAC as a region, because obviously that's our key interest here today. I'm going to focus mostly on inbound or international travel. And I'm going to talk about key source markets, so outbound markets in APAC to begin with, including China and India. And then I'll move on to the outlook for different destinations in the region as well. And finally, I'll share some risks to the outlook. So firstly, I'm going to provide a little bit of macroeconomic background to what I'm going to talk about today. So GDP growth in economies around the world is generally weaker than in the years before the pandemic, but it is improving. And we like to characterise this as steady but improving GDP growth. So the outlook is steady, but it's improving. So on this graph, we've got GDP growth through a range of markets, and we've got the dark blue bars on the left for each market, which is showing the average in the years before the pandemic. And then we've got subsequent years in 2023 and our forecast for 2024 and 2025. And what you see here is that generally in advanced economies, which are on the left of screen, we expect GDP growth in the next 2 years, so in the grey and the red bars, to improve relative to 2023, but be a little bit weaker than what it was before the pandemic. Now, it's a little bit different in emerging markets. So China is seeing relatively weak growth, but it's still high compared to advanced economies. In India, we expect a small decline this year in GDP growth, but a bounce back next year. So overall, we characterise this global macro environment as seeing inflation coming under control, an increase in disposable income for most consumers and potential travellers throughout the year. So against this macro backdrop, we expect continuing recovery for global travel flows. So this graph shows visitor nights for domestic and inbound travel for the world in aggregate, and it's being shown relative to 2019 levels. So globally, inbound travel is forecast to recover 2019 levels this year. So you can see that in the light blue bars. Now this has taken longer than domestic travel, which is in the dark blue bars, due to the lingering impacts from the pandemic. But ultimately, inbound travel will grow more quickly over the long term. So you can see that with those light blue bars being higher than the dark blue from 2026 onwards. But let's look at inbound travel in a bit more detail. So our key focus today is obviously on APAC. So that's what I'm showing in this graph. Inbound travel for APAC relative to 2019 is in the dark blue bars. And for the rest of the world in aggregate, it's in the light blue bars. So what you see here is inbound travel to APAC destinations is recovering more slowly in the near term because, as we know, there were generally tighter restrictions on travel during the pandemic, and it took longer to lift those restrictions. So APAC overall is expected to recover pre-pandemic volumes in 2025, for inbound visits that is. This year, we're expecting volumes of inbound travel to be around 5% below pre-pandemic levels. And we can see this recovery path as well by looking at inbound travel to cities rather than countries. So this map shows the 300 cities in our global city travel database. And we're showing the volume of inbound visits relative to 2019. So circles in green represent cities where inbound visits will have recovered 2019 levels of inbound visits this year. Cities in red are those that will not recover pre-pandemic volumes this year. And the size of the circle reflects how far away from zero, either higher or lower, so how far away from the pre-pandemic level that city is. So what you see here is, the key point is that there's a lot of red circles in APAC. So there's a lot of cities that will not be recovering inbound traveller volumes this year. Europe, by comparison, is mostly covered in green circles. But if we flip forward 1 year to 2025, so our forecast for 2025 instead of 2024, it's the same map, but what you see is that there's a lot more green on this graph, meaning the outlook is improving. So I'm just going to flick back briefly. That's 2024. This is 2025, so there's more green. However, looking at APAC, particularly China, you'll see there are still quite a few red circles there. There's fewer than in 2024, and they're smaller, so further progress will be made, but ultimately the pace of recovery for inbound visits to city in APAC generally lags that of elsewhere. But having made that point that the near-term outlook for APAC, or inbound travel to APAC, is relatively weak, it's important to recognise that the long-run outlook is positive. So from 2027 onwards, APAC sees a stronger recovery than the rest of the world in aggregate. So this graph is showing the same as what I showed a few graphs previously, but this time the timeline is extended to 2030. So there's some short-term weakness in the outlook for inbound travel to APAC, but strength in the longer-term outlook. So you can see this from those dark blue bars being higher than the light blue from around 2027 onwards. And that's a point I really would like to emphasise. The outlook for inbound travel to APAC destinations is a little weaker than other regions in the near term. However, that's a temporary phenomenon in our view, and it reflects a hangover from pandemic restrictions. But that stronger term outlook that I've pointed out reflects a few factors, including demographics, economics, and related to this, the composition of source markets for inbound travel to APAC countries. So over time, APAC destinations are gaining prominence. So this graph shows the share of global inbound visits accounted for by APAC, which are the bars on the left, or the columns on the left, Europe in the middle, and other regions in aggregate on the right. And I'm showing this for a selection of 5 different years. So APAC's share of global inbound visits was 21% in 2010. It increased to 24% in 2019, fell during the pandemic due to the disruption we all know about, but we're projecting it to increase further to 25% by 2030. So over time, APAC is gaining share of global inbound visits. It's becoming more important as a destination region, while Europe is slowly becoming less important, and other regions in aggregate are remaining steady. And part of this reason why APAC is gaining prominence in terms of destination travel is because APAC is also becoming more important as a source region. So for a brief moment, I'm switching focus in these graphs from inbound travel to outbound travel. So what I'm looking at is where international travellers come from. And over time, APAC has and will continue to become a more important source of international travellers. So this graph shows the share of global outbound visits accounted for by APAC, Europe, and other markets in aggregate. So APAC's share of global outbound travel increased from 22% in 2010 to 26% in 2019, and we expect that to grow further to 29% in 2030. So again, APAC is becoming more important as a source region over time, while Europe is becoming less important. And the vast majority of outbound visitors sourced from APAC source markets go to destinations elsewhere in APAC. So this graph here shows a breakdown of, in 2026, where APAC outbound visitors will go to, so what destinations they'll go to. So 77% of visitors from APAC source markets, or APAC countries, will go to APAC destinations. 10% will go to Europe, 8% to the Middle East. So the way of summarising this is APAC is becoming more prominent for inbound visits because APAC is also becoming more prominent for outbound travel. And most of these outbound travellers go elsewhere in the APAC region. But while we talk about outbound visits from APAC source markets, it's important to remember that the propensity to travel among APAC countries is still quite low. So this graph shows outbound nights per capita for each region. So nights spent travelling internationally relative to the population. So what you'll see here is, despite an increase from 2010 through to 2030 for APAC, the propensity to travel internationally is still very low compared to that in Europe, the Americas, and the Middle East. And it's only slightly higher than that for Africa. So this low propensity actually points to tremendous potential or upside potential for travel from APAC source markets as economies develop further and incomes rise. So we can expect there to be more travel to come from APAC source markets. And as I've already shown, a lot of that will go to APAC destinations. And that includes for India and China specifically. So I'm showing travel or nights relative to population again here, but I'm showing for outbound in the dark blue bars and domestic in the light blue bars. So what you can see here is that in 2030, the outbound nights per capita in those dark blue bars travelled by each country's population. So even by 2030, the propensity to travel internationally among China and India is still very, very low, taking their populations into consideration. Really low if we compare it with Japan, Australia, the US, and the UK. So the growth in prominence, so there's enormous potential among China and India as source markets. So I guess I want to make the point that the growth in prominence for APAC as a source region is not over. It's just going to increase. So I've provided a global, like an overview of global regions, but let's look at some individual source markets. So in 2023, China provided almost 15% of all outbound visitors going to destinations elsewhere in APAC. But this includes travel from China to Hong Kong and to Macau. So this is technically classified as international travel based on the UNWTO framework. However, we know that in reality, this is more akin to domestic travel due to the unique relationship between these countries. So I'm going to exclude that going forward in this analysis. So in that case, China provided 7.9% of outbound visitors to APAC destinations in 2023. But this was not the largest source market for travel to APAC destinations. The largest source market in 2023 was actually South Korea, again, if we were excluding travel between China and Hong Kong and Macau. So South Korea accounted for over 9% of outbound visitors to APAC destinations in 2023. After this, the next largest was China, followed by Singapore, the US, and Malaysia. Something to note here again is that of these top source markets for APAC destinations, only 2 are from outside APAC. So that's the US and the UK, which you can see in the grey bars there. So it just illustrates again how important intra-regional travel is for APAC. But this is 2023, and this doesn't represent what we'd consider to be a normal travel environment. Travel flows were still heavily affected by disruptions from the pandemic, in particular for China. And that's evident when we look at the recovery of China in 2023 as an outbound market. So these graphs are a little different to what I've shown already. So these show a 3-month moving average of outbound travel to all destinations relative to the same period in 2019. So on the left, we have some large global source markets, the US, UK, France, Germany, and Italy. And on the right, we've got China, Japan, and Southeast Asia in aggregate. And the timeline on these graphs is from early 2020, when the pandemic started, to the end of 2023. So what you see here in the graph on the right is how far behind the APAC outbound markets are compared to Europe and the US. So there was notable improvement over 2023. It was very positive, but there's still a lag. And of particular interest is if you look at those the dark blue lines there, is how travel from China, excluding travel to Hong Kong and Macau, which is in the broken blue line rather than the solid blue line, is still so low. So we see there's still a way to go for Chinese outbound travel to recover. And on that topic, our forecasts are for Chinese outbound travel to all destinations to recover from 60% below 2019 levels last year to about 28% below those levels this year. And we're expecting Chinese outbound travel to all destinations to recover pre-pandemic volumes around 2025, 2026. So it's quite a bit slower than for the rest of the world in aggregate, which are in those grey bars. But from 2027 or 2028 onwards, outbound visits from China will, relative to 2019, grow by more than outbound visits from other global source markets in aggregate. So destinations that are highly exposed to China as a source market will likely benefit in the longer term, despite the fact that they would have seen some pain or some weakness recently due to that slow recovery in Chinese outbound. Now, 2026 is when we anticipate travel patterns among APAC source markets would have largely normalised. So on this graph, I'm showing the share of all outbound visits to APAC destinations in 2026, our forecast for 2026. But the countries are still ranked in their order of prominence in 2023. So what you see here is that in 2026, China has regained its prominence as the top source market for international visits to APAC destinations, and by quite some margin. South Korea will be second, and then followed by Singapore, Japan, Taiwan, and Malaysia. And again, these top markets are almost all in APAC. But how about longer term? What about beyond 2026? So our forecasts have India as the quickest growing outbound visitor market for APAC destinations in this period, from 2026 to 2030. So average annual growth in outbound travel from India to APAC destinations, we're expecting to be at about 7% over this time period. But it's not the largest by much. So South Korea, Japan, and China are forecast to grow only slightly more slowly, and the UK is expected to see similar growth, in fact. Now, what I'm showing here is the change in share for these markets in terms of their outbound visits to APAC destinations. So China, South Korea, Japan, and India are all going to gain share of visits to APAC destinations. So they're going to become more important or more prominent as source markets, while Thailand, Vietnam, and Singapore will become less prominent. Now, this is looking at the change in share, but many of these markets that will lose share will still be very important for destinations in the region. So this graph is showing the proportion of the increase in visitors to APAC that are accounted for by different source markets between 2026 and 2030. So China is going to provide 22% of the increase in visitors to APAC destinations between these 2 years. South Korea will provide 10%, Japan 6.5%. But an important point to make is even a market that loses share, such as Singapore, it's still going to be very important. It's still going to account for 4.5% of the increase in visitors to APAC destinations. But this is looking at APAC in aggregate. We need to consider the variation for individual destinations. So let's take a look at that. So to start with, this graph shows our forecast for the share of all inbound visits to APAC that will be accounted for by different country destinations in 2026. Again, excluding travel between China, Hong Kong, and Macau. So Thailand will be the largest destination for inbound travellers in APAC in 2026, receiving 13.5% of all inbound visits to the region. Japan will be second largest, then Malaysia, China, and India. Now these bars are all different colours because those colours indicate what sub-region these destinations are part of. So Southeast destinations are in the light blue, Northeast Asian in the dark blue, South Asia is in the red, and there's only one country from South Asia in that list, India. Oceania, Australia, my home country, is in grey, but there's not many countries in Oceania. But visits to these destinations will increase at different rates. So here we're showing the destinations ranked in order of their size in 2026, but we're showing the average annual growth we're forecasting to visits in these destinations between 2026 and 2030. So China is actually expected to see the strongest growth among these destinations, growing at an annual rate of around 8.5%. Singapore, Vietnam, and Indonesia will also see quite strong growth. Thailand and Japan will see relatively weaker growth though, as well as Malaysia. And those destinations with the strongest growth rates, so China, Taiwan, Indonesia, Vietnam, and Singapore, they're also going to gain share of inbound visits to APAC as a region between these 2 years. Japan and Malaysia, though, which have among the weakest growth rates, will lose share. So they'll become less prominent as destinations within the region. Now, I've discussed the outlook for different source markets and destinations in the region, but now I'm just going to talk a bit about some of the risks to the global travel industry. And to do this, I'm going to draw on some of the findings from our own travel industry monitor. So this is the quarterly survey that we publish to evaluate the health of the travel and tourism sector and identify challenges and opportunities based on respondents' views. So these are the results from March this year. So the results of this survey point to costs and staffing issues as being the greatest challenges for the industry at the moment. So the cost of accommodation was cited as being a challenge by the highest share of respondents. So 60% of respondents cited this as being an issue or a challenge. Staffing issues and increasing cost of accommodation was cited as an issue by 51% of respondents. So these three challenges, accommodation costs, the costs of business and staffing issues were reported by more than half of respondents as being an issue or a challenge for the industry. On a more positive note, down towards the bottom of the graph, the quality of tourism services was only reported as being an issue among 5% of respondents. So that's one positive outcome from this. What you see as number 4 there is the cost of flights, and I'm going to talk about that a little bit more. So the cost of airfares wasn't one of the top 3 challenges, but it was cited as a challenge by almost half of respondents. And that's not surprising given that high airfares have been a feature of the industry since the recovery from the pandemic commenced. And this is broadly reflective of longer-term shifts within the airline industry. So in the decade before the pandemic, global airfares fell by more than 30% as airlines engaged in discounting and strong competition. But that era is expected to be over. So going forward, we expect airfares to consistently grow at or above inflation. So these will continue to represent a challenge to the tourism industry going forward. However, what we've learned in recent years is that people are prepared to spend on travel. So there may be slower growth going forward in tourism compared to the counterfactual case of airfares still being discounted like we saw before the pandemic, but there will still be strong growth nonetheless, in spite of this challenge. Just to finish off, I'm going to provide another indication of risks to the tourism outlook. So to do this, I'm going to show you some scenarios for international visits. So we publish these every quarter to coincide with our baseline forecasts. So these upside and downside scenarios represent a combination of macroeconomic factors and political factors. And we've modelled how, if these factors eventuate or play out, they will impact our forecast for international travel. So in our upside scenario, economic conditions are stronger than the baseline, so inflation returns to target more quickly, meaning that central banks ease monetary policy and lower interest rates sooner. This means there's stronger growth in consumer spending, which in turn supports continued growth in travel and ongoing recovery. And as well as this, outbound travel from China recovers relatively more quickly than what we're expecting in 2024. In the downside scenario, the opposite happens with inflation. So inflation remains stubbornly high. This means central banks keep interest rates higher for longer. Now, these higher rates will weigh on household income and labour markets, which leads to a slower recovery in consumer spending and ultimately a slower recovery in travel. And this weakness is also in this scenario exacerbated by geopolitical tensions. So, for instance, the war in Israel will continue for longer than the baseline, and there's spillovers to neighbouring countries in the Middle East. So that's a summary of what's included in these scenarios. So if these scenarios play out, this is the estimated impact on international visits to APAC as a region, relative to our baseline forecasts. So what you can see here is in the upside scenario, where economic conditions are stronger and China bounces back quicker as an outbound market, inbound visits or arrivals to APAC destinations will be about 8% higher each year over this forecast horizon compared to our baseline forecasts. In the downside scenario, where the global economy is weaker, inbound visits to APAC would be around 8 to 9% lower than the baseline. And to convert these percentages into numbers that make a little bit more sense or a little bit more intuitive, this is equivalent to 41 million fewer visits in 2030 in the baseline scenario in the downside scenario relative to the baseline. And in the upside, 40 million more visitors to APAC in 2030. So the range of risks around our baseline forecast point to this variation in the level of arrivals to the region by 2030. So that's why it's important to consider variations in the global economy and variations in other factors, as well as political tensions, because there can be significant impacts on visitor numbers to destinations. So that's why it's so important to consider risks around forecasts rather than just looking at that central number. So now, just to wrap up, I just want to, highlight what I consider to be the key takeaways from what I've shared today. You may have a different opinion, but this is what I think are the important factors in my view. So global inbound travel will recover this year. There's a slower near-term recovery for APAC, but there's a stronger longer-term outlook for APAC as the region continues to gain prominence for outbound and for inbound travel. China will continue to be the most important source market for APAC destinations overall, but recovery in this outbound travel is not expected until 2025 or 2026. India, South Korea, and Japan will grow relatively quickly as outbound markets for APAC destinations, and they'll gain share in terms of their prominence. These source markets will become more important over time. China will also continue to become more important over time. In terms of inbound destinations, China, Singapore, Vietnam, and Indonesia will see the strongest growth from 2026, when we think travel would have largely normalised, to 2030. And these destinations will gain share. There's downside risks from the Middle Eastern tensions and potentially stubborn inflation, but there's upside risks from China rebounding quicker and inflation or monetary policy easing sooner. So these upside and downside risks are important to consider when thinking about the outlook for the travel and tourism industry. So thank you very much for listening. It's a pleasure to be here in person, and please do let us know if you have any questions. We'll be around today, so come and find us and have a chat. Thank you very much.